Get unlimited access to all of our CPE courses at www.teachucomp.com/unlimited CPE.
Chapter 4, Special Situations. In this chapter, we will take a brief look at several different special situations relating to residential rental activities. In this lesson, we will discuss condominiums. In the context of residential rental activity, the IRS defines a condominium as a dwelling unit in a multi-unit building that can also take other forms, such as a townhouse or a garden apartment. Condominiums are different than other dwelling units because owners will share common elements such as land, lobbies, elevators, and service areas. Because of this, most owners pay monthly or yearly dues for maintenance and upkeep of shared spaces. If a taxpayer decides to rent out a condominium that he or she owns, all expenses discussed in previous lessons can be deducted. The taxpayer may also deduct any dues or assessments paid for maintenance of shared spaces. However, expenses paid in order to add improvements to the condo are not deductible.
Like what you see? Get unlimited access to all of our CPE courses at www.teachucomp.com/unlimited CPE.